Hello, welcome to the Speculation Lab. Price action is a super popular way to trade, and there are tons of different approaches out there. The naked trading is probably the most well-known. They're all about keeping it simple, just use candlestick charts without any indicators to make trades. Back when I was still getting the hang of all the different indicators and strategies, I was a firm believer in the minimalist naked trading philosophy too, but lately I've been seeing things a bit differently. Sticking only to candlesticks for price action while ignoring the wealth of other indicators available now feels a bit limiting to me. Candlestick charts, alongside indicators and combined strategies, serve as invaluable tools in the trader's arsenal. If there are effective technical tools out there that can enhance market analysis and trading decisions, it seems only logical to welcome them. It's all about weaving these tools into your personal trading strategy, continuously refining and improving your approach. Next, I'll walk you through the 3 steps I follow every time I trade using price action, complete with examples. By sticking to these 3 steps, not only can you curb impulsive trading behaviors, but you'll also be better at spotting trading opportunities with high certainty. And all you need to do is smash my subscribe button. This is a Bitcoin to USD candlestick chart. If you're used to short-term trading, you should primarily focus on the 15-minute, 1-hour, and 4-hour charts, covering small, medium, and large time frames. The first step is to determine the trend in the larger time frame. Trading is made up of buying and selling, which create orders, and these orders form the candlesticks. Candlesticks can create a pattern that looks like the letter N, and the accumulation of these N-shaped structures can establish a trend. This transition between bullish and bearish trends represents the cycle of economic periods. Understanding this evolutionary relationship helps us recognize that an N-shaped structure can lead to an ascending trend. This means multiple N-shaped patterns, each with higher highs and higher lows, come together to form a market condition. As the first N pattern of rise, fall, rise appears and accumulates, we see higher highs and higher lows forming. Conversely, N-shaped patterns with lower highs and lower lows indicate a downtrend. As we can see, the 4-hour chart is characterized by multiple ascending N patterns marked by higher highs and higher lows. This allows us to infer that the overall trend is upwards. Following the principle of going with the major trend and against the minor trend, we can opt to enter a long position during a price retracement. So, where's the ideal point to enter? It's something that can be anticipated. Areas where the price is likely to halt have reference value. So the second step is to identify the value areas within this upward trend. These value areas could be dense trading zones, supply and demand areas, significant swing highs and lows, key Fibonacci retracement levels, or psychological support levels at round numbers. Typically, these spots are potential areas where price action may pause. Because a significant amount of capital is traded based on these positions, a plethora of unexecuted orders tend to cluster around these areas. The volume of these pending orders directly impacts price movements, making these spots often the best for trade entries with favorable risk-reward ratios. So, how can we confirm whether these value areas will actually cause the price to halt when it approaches them again? This requires a third step for verification before entering a trade. Generally, larger time frame trends can suppress smaller time frame movements, and vice versa, smaller time frame trends can influence larger time frame dynamics. We switch to the 1-hour or 15-minute charts to see if there are any price reactions at these lower levels. For instance, as the price retraces to a value area within the upward trend, we might look for clear reversal patterns such as a head and shoulders bottom, double bottom, or a pin bar with a long lower shadow. These are evident reversal formations. Or we could look for indicators like MACD divergence, signaling that the previously dominant market force is starting to weaken in this area. These signals can help confirm the effectiveness of the value areas. These are the 3 steps I typically follow when trading using price action. Finally, we can formulate a trading plan because when the price retraces to the value area, the 1-hour chart shows a bullish MACD divergence, indicating the effectiveness of this value area. Therefore, choosing to enter at this position is advisable. As the market progresses, a head and shoulders bottom pattern emerges on the 15-minute chart. At the breakout of the neckline, it's a good strategy to add to the position with the stop loss set below the value area. The first profit target could be near the previous swing high. As the price continues to evolve and a head and shoulders bottom pattern appears on the 4-hour chart as well, we can hold the remaining portion of our position boldly to aim for higher profits. At this point, it's also wise to move the stop loss to the entry price to avoid turning a profit into a loss due to sudden market fluctuations. This trade has a very considerable profit potential. Let's examine a short trade example, this time with the euro to US dollar pair on a 4-hour chart. The first step, observing the N pattern's lower highs and lower lows, indicates a downtrend in the larger cycle. So our primary focus should be on entering short positions when the price bounces back to a value area. For the second step, we use the rectangle tool to mark the value area within this downtrend. In the third step, we observe that on the 1-hour chart within the value area, a double top reversal pattern appears and the MACD shows bearish divergence. Based on this, we can choose to enter a short position when the MACD bars switch from solid to hollow. The stop loss is set at the upper edge of the value area, and for profit taking, we can opt for a phased approach, taking some profit at the bottom of the consolidation range and closing the entire position at the previous low. The earnings from this short position can also be substantial. That's the essence of the price action trading system. If you're considering adopting this system, it's definitely worth your time to optimize it. Alright, don't forget to hit the subscribe button to stay updated with more profitable trading contents. I wish you a good morning, good afternoon, and good evening. Goodbye.